So, what is the truth about Forex trading? For starters, there's a million ways you could play this game, right? Literally a million ways. There are no universal rules on trading, right? Everybody can trade different entry models or, whatever the kids call them nowadays, different indicators, price reading logics, etc., etc. Endless systems you can apply to the charts to try and dig out profits. Everybody's using so many different things nowadays. The only thing that all profitable systems have in common is some form of risk control, right? Risk management. Static, dynamic, scale in, every single profitable system includes some kind of a risk control plan. And that's the truth that most traders just don't want to hear, right? Everybody's talking about psychology. Everybody is talking about strategy, ICT, smart money concepts, all of that good stuff, right? But nobody is actually explaining you how, any of those systems or any of those strategies, right, could potentially turn over a profit. Just because you're trading, ICT or whatever, imagine believing that there's actually a thing called ICT and people actually say that out loud, I can't believe the shit I see online. But let's just say that, ICT is actually a thing and not just reused concepts. The thing that actually makes you profitable using, theories and practices that the guy teaches is not, the technicals. It's not where you enter the market. Well, of course, doing that in a consistent manner matters, but the key is the math behind it all, right? In trading, you never win 100% of the time, right? You can maybe do 50 or 60%, depending on what kind of risk reward ratios you're going for, but that's about it, right? So if, any system, any strategy is as good as, people say, I'm talking about fair value gaps, ICT, all that good stuff, you wouldn't be winning only 40-50% of the time. You'd be winning 90% of the time, maybe 100% of the time, if the theory and the whole knowledge behind it was so good, so incredible, you'd be winning all the time, right? But that's not the case. You're winning just as much as somebody who's trading support and resistance, or somebody who's trading, I don't know, simple trend following systems. You don't have the golden key to the Forex gates. You don't. So what I'm trying to say is, I guess, the key is in the math, in the statistics, in the probability, right? You want to make money. So if you're trading a 1-2 in risk to reward, basically all you have to do is win between 40 and 50% of the time. And that's the key to trading. Understanding the math behind long-term profitable retail trading. The math, the statistics, the probability. You guessed it. You guessed it right. And trust me, that has nothing to do with fair value gaps. It has nothing to do with areas of liquidity on the chart below, change of character levels and structure shifts and all that good stuff. No. All of that are made up names by made up gurus who are trying to sell you a $10,000 course so they can buy another Lamborghini. And is that necessarily bad? No, because, well, yeah, the knowledge that they provide could potentially help you, make money, but the key still remains in the math. If somebody isn't explaining the math to you, all they're doing is lying, deceiving. All they're doing is wasting your freaking time. Because the truth is, and here's the truth, literally any system, any strategy could be made profitable with the right settings, of course. Technicals, entry exit criteria simply aren't enough. That's the bare minimum. You need the break even data. You need, so when you're setting your stops to either break even or trailing in the profits, all of that stuff. You need to, I don't know, set up for swaps. You need to set up for spreads if you're scalping. You need to be prepared for literally anything. And that is where the math comes in, right? When you do something over and over and over again, a million times, a billion times, a gazillion times, you're going to start spotting patterns, right? Of course, you collect data on that. You should collect data on that, and you should spot patterns within that data that's actually written down. You shouldn't just think you're seeing something because you're not actually writing down the data. You should actually have the data, I don't know, in Word, in Excel, or whatever, spreadsheets, I don't care. But once you start seeing that things happen over and over and over again, and you can call those things fair value gaps, you can see support and resistance areas being respected, at some level of consistency. Maybe that's 50% of the time, maybe that's 40% of the time, but that's where you make money, right? You make money when you're right, and when you're right, you make more than when you lose when you're wrong, if that makes any sense whatsoever. It's actually incredibly simple. It's not hard at all. A lot of people still don't understand. Actually, I'd say that 90% plus of people still don't understand this. Today there was a post on Reddit where this guy posted a screenshot of euro US dollar, I think, and he said, well, everybody's trading gold, I'm making bank on euro US dollar. This was a textbook setup. Okay, this was a textbook setup to what? Because trading isn't a universal language, right? Not everybody sees or does trading the same way. There's a million different ways, like I said in the beginning of this video. So a textbook setup is not a thing. Well, you could argue it is a thing within a system, right? But not in general, overall, and a universal thing. No, that's not how it works, right? It could be a textbook setup for your specific system, for your specific strategy, whatever. That's great. But what does that have to do with literally anyone else in the world? I don't have data on your system. I don't know the rules. I don't have the playbook. I don't have the trading plan. I don't have anything. So you explaining that I missed a textbook setup that I don't know anything about is nothing, really. Is nothing. It doesn't exist. It's nothing. And I see that all the time. People don't understand what trading is. People don't understand how to trade. People don't understand how to exploit very, very simple mathematics to gain a mathematical advantage over the market. It's incredibly simple. All you have to understand that you have to limit your downside potential, you have to maximize upside potential, basically build positive expectancy, and you do that with data. That's the truth about trading. You don't pick ICT and work on your psychology, because at the end of the day, the best that could happen is maybe you achieve some form of a break-even result. That's it. You're simply not going to be able to make money if you don't understand the core on trading. Period.